Mayuresh Joshi from Angel Broking is now joining us this afternoon. Mayuresh, good afternoon. After a 500-point move in 3 days, such a dull day is welcomed, or bulls again would be complaining?
I don't think anybody is complaining, Pankaj, at this point of time. And what you're probably seeing is more respite with world markets moving in tandem with what has happened with crude. Our own budget was quite balanced in our opinion. The fiscal targets, the borrowing program that the finance minister has embarked upon, he has given cheer to the bond markets as well. So I think all classes are probably enjoying both short covering as well as the kind of impetus given by the budget. So clearly I think markets are looking a bit more cheerful at this point of time.
Right. As far as budget is concerned, you think that event is behind, that's the reason we are cheering, or it's just a matter of coincidence that the event is also behind and global markets are also seeing a risk-on rally?
So I think it's a combination of a multitude of factors, Pankaj. The global markets are rallying, you see short covering happening there, the budget event is behind us, no major negative surprises. In fact, as I mentioned earlier, quite balanced the kind of spending that the government is expected to do on rural India, on infrastructure, the expectations of monsoons. Because he's stuck to the fiscal consolidation path, markets are now assuming the RBI cut is going to happen. So again, all these multitude of factors working in favor of the risk-on rally that you're probably seeing in equity.
Right. How would you play this risk-on rally from here on? You buy into names which have not seen any major move coming in so far, so that they can play a catch-up, or stay with companies which have strength and which have not broken their 52-week highs, or are in and around that, where there are very few companies which have not broken 52-week highs?
So again, I think I'll be more focusing on the government aspect of power, infrastructure, and within this ambit itself, I think a whole host of companies can do exceedingly well over the next couple of years. So I think the companies which have probably had stable earnings growth and where the earnings growth is expected to quantify probably in the next few quarters and years, I think these are the companies and sectors that we'll be probably looking at this point of time. Valuations, again, I think have meaningfully become lower for a lot of sectors as well as companies operating out of these sectors. So one really has to be stock specific when you're talking about how to invest in the markets here on. And again, I think it has to be calibrated moves. You're not expected to invest a whole lot at a given point of time. You need to basically expect the markets to consolidate at higher levels or even correct if something goes wrong globally again. So I think investing at different points of time over the next few months, more in a systematic way of approaching the markets, is the way we look at things right now.
Right. What would you buy into the large cap space? What are the names that you like despite the move being on the higher side?
Well, clearly, I think the sectors that still probably attract us is large cap IT. Our own belief is that though the rupee probably has appreciated from higher levels, you're probably expected to see strong dollar and rupee revenue growth, and both in constant currency terms. RR take is at FY 16-17 should be far better. So large cap IT is something that we'll still continue to prefer. Cement stroke infrastructure is something where our belief is if the GDP is expected to grow at 7.5%, the cement volumes normally move in the average of 1.5 times your real GDP growth. So clearly you're expected to see volume growth in excess of 10% over the next few quarters. Volumes coming back, demand coming back would ensure that the price stabilization happens. The utilization levels improve from the current levels, and clearly that will have an impact on cement names as well. Selectively, pharma as a sector is something that we still continue to like, though the overall valuations on a historic basis remains high. So I think we'll approach a stock-specific approach within the pharma name. So I think to name a few companies, I think Infosys, HCL Tech, Ultratech, Sun Pharma, Cipla, Dr. Reddy's is something that we're probably liking at this point of time.
Right. As far as the mid-cap space is concerned, you think there also a lot of opportunity exists? Still, DIIs are overrun. They are still getting inflows. There are no problems of outflows at least. So you think mid-cap, small-cap would also do well, at least the companies that are delivering on numbers?
Oh yes, I mean, that's generally been the case. And again, I think if you see the markets correct, I think a whole host of these companies correct. And then the valuations become even much more attractive. So clearly with the thrust that the government has on roads and highways, the expected outlay of 57,980 odd crores on roads and highways is a substantial figure in our opinion. The infrastructure outlay that the government has laid upon, both in terms of the Gram Sadak Yojana, electrification of villages, the urban cities, I think it's going to augur well for a lot of these EPC guys. So yes, I think a few of the mid-cap companies where earnings growth is expected to remain stable and strong over the next few quarters is still we're liking. The pockets we're liking probably is roads, highways, EPC players, port players, a few of the infrastructure companies as well.
Right. Let's talk about the power sector. We got a deal coming in today that Adani Power may be looking to assess assets of JPL, that's Jindal Power. You think a lot of, in the infrastructure space, a lot of consolidation will happen before we see earnings growth coming in?
I think that will happen in most industries, Pankaj, but clearly I think within the power space itself, I think a lot of the companies are going through stress. So if I leave aside the government-owned companies, a lot of the private companies are having a huge amount of leverage on their balance sheet. What kind of enterprise value they derive on their assets at the current juncture is going to be a very interesting proposition at this point of time. And whatever buyouts you're probably seeing in terms of consolidation, whether you talk about the GP deal with Ultratech, I think those assets probably are stressed because I think the lender itself or the payer itself or the owner of the asset probably does not have enough resources to probably even do the interest payments. So clearly stressed house assets with leveraged companies, I think this is where I think the deals are happening at this point of time. But again, I think one needs to do a careful analysis of what kind of enterprise value these assets are being sold at, what kind of valuations they might probably derive going forward, and whether any valuation metrics make sense for the buyer to probably take these assets at the price that he's probably procured.
Right. As far as any view is concerned on the mid-cap space, names that were not doing that well are suddenly seeing a rally. So JSW Energy is doing well, Ajastal is doing well, Kaveri Seeds is doing well. You think it's purely short covering into some of these names?
Again, maybe I think these stocks were beaten down so much for individual reasons of their own that you're probably seeing some amount of risk bite coming onto the stock. But as I mentioned earlier, we'll be extremely selective within the mid-cap pack because I think the valuations have run up too much since we have been doing this conversation for a long time. And again, I think my thesis remains the same. I think you look out for sectors where earnings is stable or expected to grow over the next few quarters. And valuations, again, with the correction that we've seen, if they've corrected meaningfully compared to the long-term averages, I think these are the sectors and stocks that we'll probably like to go with. And as I mentioned earlier, I think roads, highways, EPC players, a few of the infrastructure companies, especially catering to the power sector again, I think this is something that I'll probably be looking at.
Siddharth, first your view on the markets. What are you picking up as far as markets are concerned? Do you think that the rally can extend from here on?
Good afternoon. Overall, we've seen the entire week a good rally post-budget. I think budget was more of a catalyst to play with, but budget was not the only thing for the domestic markets. If we talk about the global markets in the US markets, I think Brazilian, in the South American market, Brazilian market was also 12% higher. Overall, US markets were 1 to 2% higher. European markets, if we talk about 4 to 5% higher in this week. If we talk about the Asian markets also, most of the markets were 4 to 5% higher, whereas India was outperforming with 6.5% higher. Having said that, what I believe is most of the global markets have gone up, so you can't completely attribute to the budget. But yes, budget, more of fiscal prudence and many other things, balanced budget played out well for the Indian markets. But how much legs the rally has, I think it is very difficult to talk about, but one has to be very cautious.
Right. Siddharth, would you invest in something like a PSU bank? I mean, a lot of steps have been taken. Markets are overestimating the sort of capital needs that are there. Say if, under so much pessimism, if something positive comes, the stocks can rally. Would you look at PSU banking names?
See, our stance remains the same. We are quite selective on the PSU banking space. In fact, we like more of a private banking space and those companies which are more retail-centric in nature, like HDFC or an IndusInd banks. In the PSU space, I think one has to be very selective because 25,000 crores of capital infusion or recapitalization plan in the budget, I think that is not adequate. Though in today's Gyan Sangam, the Ministry of Finance even has emphasized on putting on more money if required and if need be more than 25,000 crores. But I think markets were more of anticipating much more than that in terms of allocations were concerned. With this PSU banking space, what we like is Bank of Baroda can be one of the company which we can look out for because of more of the recognition of the bad assets has been more or less done. less of a liquidity requirement, as management commentary has been saying. So we would like to bank on Bank of Baroda and rest of the private banking space, as I have mentioned before.
Right. Mayuresh, what will be your view on PSU banking names? You think the outcome would not be as bad as it is? At least select PSU banks from the large cap PSU names would do well?
No, clearly, I think what has been allocated is much lesser than what we were anticipating and what the actual needs of the industry are over the next 2 years. However, I think the Finance Ministry has made it very, very clear that it would be accommodative if more funds are required. Having said that, probably in terms of even the tweaking of the Basel III norms, with re-evaluation reserves, foreign reserves being accounted for Tier 1, that probably cushions capital to a certain extent. So in terms of credit growth returning back, the banks are well capitalized, at least on the Tier 1 ratios, to provide that additional credit growth that the system needs going forward. Having said that, probably I think State Bank is something that I'll still say that if the investors are holding from lower levels, continue to hold that. One of the strongest banks with a very strong franchise, at least within the PSU universe. So I think State Bank is probably the only bank we're liking within the PSU universe at this point of time.
Right. Mayuresh, Siddharth, just stay on with us. About 100 seconds remaining for market close. It's a good close considering that we have done quite well in the last few days and just 22 points higher, but we are closer to the 7,500 levels. We are looking in decently good and we've not seen selling pressure today. So at lower levels, there is buying, what this move suggests. BHEL 4% higher, Tata Steel 1% higher, Axis Bank flat with a positive bias, Tata Motors up about 2%, 342 for Tata Motors. Coal India up 3.5, 325, 10 to 11 rupees higher, NTPC down about 1 rupee, Tata Power down about 0.4, Adani Ports down about 0.5%. Idea Cellular was one of the top losers, Kane down to 128, 1.39% lower as far as Kane is concerned. Tech Mahindra 2.5% decline, 450 rupees for Tech Mahindra. Cipla 2% higher, 532. Reliance flat with a negative bias. Bharti down about 0.5%. HCL Tech 2.4% decline. Ambuja Cement 1.2% higher. BPCL 3.5% higher, 815. Z Entertainment up about 0.39%. HDFC Limited 0.8% higher, 1,134. Wipro down about 1%. Sun Pharma down about 1.5%. HUL absolutely flat as it could get. IndusInd Bank 2.5% higher, 920. Asian Paints 1.5% down. GAIL up about 0.6. TCS 0.5%, actually 0.25% lower. M&M no real change for that name. Maruti down about 1% or so. Dr. Reddy's 1.8% higher, 3,246. That's the closing bell. Lupin flat. Bajaj Auto up 1.7. Hero MotoCorp up about 0.25%. Ultratech down 1. ACC down 1.4. Grasim flat with a positive bias. Really no volumes, no trading for Grasim today. SBI 3.5% was one of the key gainers. Look at the volumes, 40 million shares, so that's not that small even if you look at the move today. PNB 5% higher, 20 million shares, lower than SBI but still decent volumes. ONGC 1.9% higher, 201 rupees for ONGC. Power Grid 2.5% higher. BHEL up about 4%, 107 rupees for BHEL. Tata Steel 1% higher, 290. Tata Motors 2% higher. Axis Bank flat with a positive bias. ITC absolutely no change, 316. But for this week, Axis Bank, of course, has been one of the major gainers. As far as Nifty gainers today are concerned, so a PNB is up 5.5%, a BHEL is up 4%, Vedanta was up 3.5%. We'll just pull up the top gainers. PNB, it's all about the banking space, and we had Hina from the Gram Sangam that is going on. So I think it's because of that these names are doing decently well. Vedanta was the third top gainer. PNB was up 5%, SBI was up 3.5%, Coal India was up 3%. So from the first 5 names, ex of Vedanta, all are public sector enterprise. So whether it's PNB, BHEL, SBI, Coal India, these are purely gaining on the trade. BPCL, next one also is a government enterprise. Then you come down to IndusInd Bank, Bank of Baroda, Power Grid. So among the top 9 names, only 2 private sector names. Cipla, Tata Motors, Dr. Reddy's are some of the other gainers. Gains are not particularly that large. As far as losers are concerned, it was technology. So Tech Mahindra down 2.5%, HCL Tech down 2.4%, Idea down 2.3%, Asian Paints down about 1.6%. Sun Pharma, ACC, Kane India, marginal losses, really nothing that one would be worried about. The broader markets did very, very well today. When you compare it to the large cap space, it did decently well. Adjust Dial ended up 14%, 761. Markson's Pharma was up 7%, 48 rupees. Opto Circuits was up 10%. It's a 10 rupee name, so it was up just 90 paisa. Kaveri Seeds 10% higher, 391. 35, 36 rupees higher for that name. Edelweiss Financial back to the levels of 58. Parshamnath Developers up 18%. I don't know, the list for the mid-cap space just goes on. There were a lot of mid-cap, small-cap names that did well today. ABB, not exactly a mid-cap, but was up 6%. Syndicate Bank, OBC, Allahabad Bank, so all the PSU banking names we saw in the large-cap space also. This was the trend that was going on. That also continues here. So ABB up 6%. OBC, Allahabad Bank, PNB, Unitech, JSW Energy, all these names just did particularly quite well today. Oracle Financial Services up 4.5%. Mahindra Financial, M&M Finance is up 4.5%. HDIL did well, it was up 4%. It was up since morning. So it's not that, there was some late surge over there, but the good thing is that the surge was not being sold into. M&M Financial Services, 240 rupees for M&M Finance. HDIL, Union Bank, Info Edge, UPL, IDBI, Shriram Transport, and names did particularly. These were some of the names that did particularly well. We were talking to Siddharth as well as Mayuresh. Both of them are still with us. Mayuresh, we spoke about the PSU banking space. Something like a M&M Finance, something like a Shriram Transport Finance that links to the rural economy. Is that something that you would bet on, or financing towards rural economy?
No, again, I think they would be expected to do well if the monsoons are better. And again, I think the stress on their asset quality would definitely come down. But as far as numbers are concerned, at least for the quarters that have come so far, whether that be M&M Financial or Shriram Transport, you've clearly seen stress on the balance sheets from asset quality. The additional provision that M&M Financial made with acceleration to the 120 days kind of a norm that they have to fulfill by FY17, even that took a toll on their balance sheet. So yes, I think a lot depends in terms of how the monsoons will pan out. And if the monsoons are far better than what one really expects this time to be around, I think there should be some amount of revival of fortunes for a lot of these companies. But very early to call right now. I think Q4 numbers are still expected to be a little bit on the softer side for these companies. So again, I think you might see some amount of dip happening onto these counters. So I'll wait for the next few months probably. I think just wait and watch till that point of time.
Right. Siddharth, how would you look at the rural side? How would you play that space? Would you want to play it with two-wheelers or something like a M&M Finance?
See, the kind of weight was put in the budget for the rural economy. I think that is something which one would like to look at. If we talk about rural economy, of course, we would like to go with the OEM space and the two-wheeler space. Hero Moto or the M&M of the world looks quite interesting, and none of the NBFCs in the rural space which we are looking out for. In particular with the rural space and the agri space, where the most of the budgetary allocation we have seen, I think one of the companies likes of PI Industry, which is again into CSM, and 40%, that is 60% of the revenue, 40% of the revenue comes from the domestic economy. I think PI Industry is also one of the company where balance sheet is quite clean. If we talk about high return ratios, good capex already done, some of the capex still left. I think PI Industries looks quite interesting in the agriculture and the rural space.
Right. How would you look at something like a oil? So, maybe a oil marketing company. Siddharth, that's something that you would look at. No custom duty came in this particular budget, which was a big fear.
See, OMC's oil marketing companies is definitely a good play. Is just because of the muted and the subdued oil prices. I think that would definitely improve the marketing margins of these companies. Even the refining part of few of the companies like BP and HP, I think that is also quite interesting to look at. And in terms of the cess, the oil cess which one is alluding to, I think that is not a great higher, because earlier what these companies was giving as a cess of 4,500 per ton was around $9, but at the current at a $35 they are paying around $7. Yes, with a caveat that if these oil prices go up to $50, I think there the hit will come to all the upstream companies likes of ONGC or any other upstream company. But what we believe is in the entire oil and gas space, we will stick to the private player and the leader, that is Reliance Industry, predominantly because of its refining and petchem businesses, the kind of expansions they have done, the kind of capex they have done, and going forward we may see the quite a good jump in the revenue side in next couple of years, as well as on the market cap front. I think Reliance Industry with their traditional business, of course 4G is one add-on, but we cannot expect entire revenue to come in by FY17, but of course it's an add-on. So overall oil and gas space, bet on Reliance Industry.
Right. In the oil and gas space, Mayuresh, you would also believe the top pick should be Reliance?
Oh yes, Pankaj, I think Reliance stays right there, and with the kind of commissioning that one really expects on the capacities expected to come up, whether on the petchem side or even on their PTA side, you're expecting significant synergies to start coming through on their numbers. We're not taking into account any revenues probably from the telecom space for this year and the larger part of next year. But again, I think a large part of their core capex and the non-core capex is largely over. The return ratios, which had remained subdued below 13%, should start seeing some amount of expansion over the next few quarters. And largely, I think the cash flows should start keeping on improving with these new capacities coming through. So clearly, Reliance is something that I'm liking. But as an offshoot to the AMC play, and I was just hearing that out, I think that a lot of these companies will pursue their capex going forward. So clearly, a company like Engineers India, in my opinion, should benefit both in terms of orders flowing through from the OEM side, as well as a lot of turnkey orders coming through. They have got cash on their balance sheet, execution has been strong, and again, I think the dividend yield remains extremely attractive.
Right. Mayuresh, something like a ABB Siemens, do you think that's a better play than L&T and BHEL? Because the coverage is less, there is always a buzz of open offer going into these names, and the love for MNC in Indian markets continue to be good.
That is always stay, Pankaj, and clearly if you look at both these players, you look at their B2B ratios. So I think the revenue visibility in terms of the order book that they've got on hand is close to 1.2 times, specifically for Siemens. Yes, I think there is a huge amount of diversified play when it comes to railways, when it comes to their healthcare division. But clearly I think valuations A remain expensive, and that remains as a headwind to the stock. B, in terms of the core order book increasing and execution improving thereof, is an important aspect to be looked at. And C, I think the import component is still pretty high. So I think the localization efforts, along with the improvement in factory output footprint, I think that requires to be multiplied significantly. They're doing the right efforts in the right direction, but again, I think all these three factors will appear as headwinds for the stock.
Right. Siddharth, what will be your view as far as ABB Siemens are concerned? Better play than L&T BHEL?
What we think is other way around. What we believe is we would still like to stick to L&T and not BHEL, but predominantly with L&T because of a reason. Of course, it's a proxy to the economy. Though the numbers are not flowing in as per the expectations, order book is not growing. A few of the legs of L&T growth, the likes of hydrocarbons, is really facing a lot of issues because of Middle East and other parts of the world where the crude is lower, where the economy is really slowing down. I think that is something which which the company has to deal with a medium-term perspective. If somebody is looking with a long-term perspective, then only one should get into the capital goods space, because currently what we believe is there is not much of a revival seen in most of the spaces. If we talk about ABB or Siemens of the world, what we believe still, if someone wants to bet on these sectors for 18 to 24 months, I think L&T would be the right choice.
Right. Siddharth, Mayuresh, thank you so much for taking out time for us. Hope you'll have a great weekend. Always a pleasure.